Good. So if you look at what we have, there in topic number 4, I think I shared the notes for topic number 4. Where was it shared to? The notes for topic number 4. Oh, it was shared to the wrong group. Let me just share it here. But going forward, I think we are going to get all that. Okay, so I think we now have it. We now have it with us. So the first thing that we have there is accounting for direct material cost. We have what we call accounting for direct material cost. So under that, when you're going to account for direct material cost, you can see introduction to material costing. So all of that is basically story. Direct material, you know, under material, the direct material that we are talking about here, I want to make chairs. The main material in that particular chair, is what? Is timber. I can trace it to the final product. Maybe I may need glue. I may even need some paints to take care of this, the invisible one, maybe things of that kind. But the main item here is timber. So this timber will be the direct material. These ones here will maybe be indirect material. When I want to do what? I want to process crude oil or petroleum. This petroleum stock crude oil is what will be processed to give us now diesel, to give us kerosene, to give us grease, any other item, any other chemical that you are going to add here to give us this final product is what we call direct material. We just need to add some items to the main product here to give us the final output. So this main item you are bringing in is the direct material. When I have here wheat flour. This wheat flour, I'm going to process it. I'm even going to bring other items, maybe cooking oil. I'm going to bring salt. Maybe if you want to do something with the sugar or whatever. As you bring these other items, all these are the requirements for you to prepare bread, for you to prepare cake, things of that kind. But as you can see, the main item that you can trace to the final product, you will not be able to see salt physically. You will not be able to see this sugar physically, but you can trace this wheat flour in the final product. So basically, that is the direct material. Any other item that you're going to bring here, we can call it indirect material. And that is what we have. So if you want to account for direct material, we now want to account for this direct material. Now look at what we have there. So that's basically the introduction part. So objective of material control. Objectives of material control. Why do we need to do material control? Remember, for us to bring in the raw material into the company, we are going to incur money. This money will be part of the cost of production. Main interest of most companies are to maximize on their profit. But the moment you do a mistake of misusing the raw materials, you are being inefficient in the production of these goods, then automatically you're going to incur the high production cost. And for you to recover your profit or make a profit, you will be forced to charge these goods at a higher price. What will happen to the competitor? They are efficient. They are maximizing the use of their raw material. They are going to set their prices at a lower rate. And what will happen to your goods? Your competitor will be able to influence the market and take the potential or even the customers in the market who are going to shy away from your goods because of the high prices. So for you to remain in business, you must understand that efficiency is very, very important, basically from the production side. So that's what we have. That's maybe the main objective of ensuring that we maintain the direct material movement efficiently. Now, if you move down there, we have what we call the functions within the scope of material control system. So what are some of the things that we need to do for us to account for this direct material? One, this direct material will not just come to the company. It must be brought by somebody, that is purchasing or procurement team. Purchasing to procurement team. So these people will ensure that the materials that are going to be purchased, one, they are of reasonable prices and they are of high quality, because the quality of the raw material that you're going to bring in will affect the quality of the final product of the company, and therefore they must be very keen on the quality of what they are purchasing and even the quantity in terms of pricing. Are they able to afford it? Is it priced at a higher rate, or is it just something that is averagely understandable based on the quality of that particular material? Number two, be able to see receiving of materials. Receiving of materials. This is where you will be able to see in a company here, there are those people who have been assigned or have been given the responsibility of taking care of the goods that are being brought into the company. Whoever supplied the goods brought in goods of high quality or the right quantity. But here within the company, there are those people who have been charged with the responsibility of taking care of raw materials. So one, some of them are selling these products, or some of them are basically stealing these raw materials. So for you to take care of that, because when they steal, it forms part of cost of production. And who pays for that? The final consumer, by increasing the price. What will happen at high prices? You're not going to get the intended customer that you are targeting with this particular product. So the receiving of materials, again, those who are going to receive these materials or are maintaining the stores, there's high chances that they are not going to take care of these goods or these raw materials. Remember, within the raw materials, we have those ones that are bulky, we have those that are perishable. If you just store them carelessly, the perishable products will not be able to produce the intended product. So if they are going to be damaged, the perishable products are going to be mishandled, then the company is going to make a loss by just throwing them away, because you cannot use them in the production of the final product. So the receiving department is very, very important in that area. Then you're also able to see we have what we call inspection of materials. Inspection of materials. Here, after these people receiving, yes, they accepted, they received, but at any given time, are you able to just appear without any notice to the store and then tell them, please, let's look at the quality of what we have, or even quantity of what we have in the store? That cross-check will also be very, very important, because they will be able to understand that at any given time, at an unknown time, then whoever is responsible will be coming to check whatever we have in the store, and therefore they're going to keep the right record. They're going to ensure that nothing is missing because of the prompt visit to look at what we have. Then we also have the storage of materials. storage of materials. Of course, it still revolves around the warehouse. Once these people have received, they have inspected, they are now going to be stored. When they are going to be stored, we must look at the right condition. Who basically within this department is going to be charged, such that if there's any product that is missing, they must just tell us where it is. Within the storage, we have those who are going to issuing of materials. As you've seen, most of you in your working places, especially those who are in the manufacturing industry, you'll be able to understand that store is not for everyone. Store is not for everyone. There's somebody who has got the responsibility to hold the keys for the store. So if you have to remove the goods, yes, they are going to open it, but not just give you because I gave so and so. No, you have to commit yourself by signing a form that on such a date, I went to the store and I was given this number of goods, and you sign against that form. This form will be circulating. Maybe it is in triplicates. One remains with the storekeeper. The other one goes to maybe the accounts department, and then this one here now goes to the production department, because the moment you take these materials from the store, you are taking them to the production department. The production manager must sign that they received those goods in the production department. The accountant must confirm that these goods were removed, used in the production. Storekeeper must also have a copy to confirm that he issued these goods under the authority of maybe the production manager. So that's where we have this. Then we also have maintenance of material records. So very important. Maintenance of material records. When you receive these goods and the procurement, remember this team here made an order. So after doing that, there's this team that's going to receive. So whatever was requested and whatever is received will be compared against the invoice that's going to get to the accounts department. You ordered these goods, well and good. We received this number of goods, well and good. Then accounts now, they want to initiate payment. They compare their LPO, they compare the receiving or delivery note, and then they also match it with the invoice to check, are these things really matching in terms of description, in terms of quality, in terms of quantity, and even pricing. Because if they ordered goods whose cost maybe is 50,000 per unit, when you get to the receiving here, of course, we have delivery. If you get to the invoice, they are telling us that the goods that were supplied, 1 unit is 70,000. Why are they increasing the 20,000 on top? So you have to be very careful, and that's why this record is very important. Then we have materials or stock audit. Material or stock audit. There's high chances that these people who have been charged with the responsibility of doing all this, they have colluded in a given way. So you must look for an independent body outside the company or within the company, but does not directly deal with these people. An independent person to come and do what? To come and audit. They collect all the LPOs, they collect all the deliveries, they collect all the invoices that were used in making the payment. Then they compare. They just get to the store physically. You count all the goods in their presence. Then they sit down to do what? To reconcile. Are these things really matching? Or we requested 50, they received 20, took away 30, they paid for the 50. Yet they only received 20. 30 was taken away by some of the people who have interest here. So that's also very, very important as you deal with this. That's very, very important. So under purchasing here, you are going to tell us what you are supposed to purchase by looking at economic order quantity. Can you receive these goods? And then under inspection, of course, that is good. You have to storage, then you come to issuing. Under issuing here, you will tell us that after receiving these goods, you are going to issue these materials. One, or even the finished product, you're going to issue them, one, by use of FIFO. So we are going to look at some methods here. First in, first out, LIFO, last in, last out. Then you're also going to look at weighted average method. When goods, it is a continuous process. You received goods on 1st of July. You received goods on 10th of July. Then on 1st of August, you issued these goods either to the market or to the production department, depending on what you are dealing with. Then you have to tell us, when you're going to do the costing of the finished product in this particular period, are we going to use the FIFO? That is, the goods that were brought in the month of July, that is 1st of July, will be the ones to be issued first. Then if they are not going to help us meet the required units, they now move to those ones that were brought in on 10th. Or are we going to use the reverse? Or are we going to say, we take units of whatever has been brought so far, the value of whatever has been brought so far, then we get the average. So that average is this one here, the weighted average method. We are going to deal with that. Then still within the same place, under this part here, we are going to look at what we call reorder level. We are going to look at maximum stock level, minimum stock level. We are going to look at what we call average stock level. Then we're also going to look at what we call number of orders. That is for a company that's going to maybe purchase raw materials. If you're going to call it, so this one here, the economic order quantity, you are ordering the raw materials. You are ordering the finished goods. But now, this is where a company want to come up with a good system whereby they're going to understand the quantity that they need to produce so that, one, they don't produce excess. Two, they don't produce less. They just produce whatever the market can consume at any given time. Then, what are we now going to use? We are now not going to use economic order quantity, but you're going to use what we call economic batch quantity. At what rate should we do our production? How many units should we produce at any given time so that we don't produce excess, we don't produce less, but we produce what the market can consume at any given time? That is still within this topic number 4, still dealing with materials and inventory. So are we together? Are we together up to that point? Are we together? Are we getting something really? Are we getting something? Are these things really making sense to someone in this particular meeting? So that is what we need to understand there. Then if you now look down there, we have the needs or objectives of material control. Why do we need to do the material control? One, you're able to see, ensure supply of adequate quantity of materials. If you don't have control, how will you know that in the store there are only 2 units remaining? In the store, there's only 10 units remaining. Or in the store, we've not picked anything from the last order, so we don't need to order again. That's very important. Optimal investment in materials. Maybe you have money that you need to use in purchasing the inventory or the raw material. So how are you going to work it out? Because you can spend the whole amount that was received from sales to buy inventory, then the following day you need to pay your employees. They are not going to be paid. If you don't pay them, what will happen to your work? They are going to stop. You have to pay them for them to continue working. So to avoid such kind of problems, you must know what you need in the store, how to balance the cash which you have for you to ensure that all the short-term obligations are met at the right time. Then we have favorable terms of purchase. Yes, you normally purchase 100,000 units, but there's a supplier who has said if you just buy more than 100,000 units, you're going to get quantity discount. So will you go for the quantity discount? And some of the factors to consider as you look for the quantity discount, are you really able to use these materials within the short time? Are they irreplaceable such that even if you get the quantity discount, they're going to become bad before you use them in the production? Something of that kind. Then we have proper reporting to management, control of maybe spoilage, control of wastage, things of that kind. Then essential elements of material control, we have coordination, centralized purchasing, receipt of materials, very important. Anytime you purchase goods, you must give us an evidence of purchase. There must be a receipt there. Then we have issue of materials, stock taking. Then now you want to come up with material control system, a system that will be directing us. Let's say for your company, if I want to do purchases, first of all, whoever uses the materials in the production department or the head of the production department does what? Approves whatever has been requested. After approving, it is taken to maybe taken to the accounts or maybe another department that will be approving that. Then the accounts department initiates the payment for such goods. We are going to do the purchases, procurement. So that procedure, that protocol, that structure is what we call the material purchase system or material control system. And that's what so why? Or what are some of the things that you need to put it, or what is the scope of that material control system? So we have it down there. You're able to see material purchasing, receiving of materials, you store them, you issue. Then after issuing, what do you need to do? You do maintenance and record keeping to tell us this is what we requested, this is what we received, this is what we issued to production, this is what we have in the store as at today, or this is what was as a result of spoilage or wastage. You indicate there. Principles of material control system, we have them there. We have them there. As you can see, one of them, you cannot tell us that you're going to do purchases, then every person, any other person can just wake one morning and say, today I must buy a new computer for my department. Then they make a requisition or you give them money. I want a new computer for my department. The following day you see somebody, we want maybe this kind of chairs in our office. They just go and buy. There must be that protocol. There must be that center of command. There must be approval of what's going to take place here for you to run this effectively. Then we move to this one here, centralized and decentralized purchasing. Centralized and decentralized purchasing. Procurement of goods. Decentralized. So you want to just get here, what you need to understand is basically advantages and disadvantages. We have company, let's say, of course you've done FR, so you understand these terms here. We have F Group Limited. This F Group has got subsidiaries. Let's say they're in the same industry and they have 100% ownership. So we have F, which owns Z subsidiary, which owns T subsidiary, which also this F still owns Z, K as a subsidiary. 1, 2, 3. Now I want to do production. Subsidiary 3 want to do production and they need raw materials. For them to get raw materials, subsidiary 3 or K limited subsidiary 3 wants to purchase raw materials to do production. But for them to do that, they cannot do that directly. under centralized. They must write requisition. It is taken to the F group. So the F group here, F group here is now the headquarter. So they must write requisition. It is taken to headquarter for approval. Then when T want to make again production, they also write theirs. It is taken to headquarter. Z does the same. Then at the headquarter here also, if they want to also to purchase raw materials, they also bring in their requisition here. Then there's a body. There's a procurement team within that headquarter that will be working on these requisitions. Once that is done, they go and look for supplier. Supplier somewhere here. Supplier. What will this supplier do? Will bring all the goods to the headquarter. Supplier brings all the goods to the headquarter. Then from the headquarter, they sort these goods. That this one here was requested by Z, they bring it now to Z. This one was requested by T, they bring it to T. This one here was requested to by K, they bring it to K. That is what we have. So here we have advantages, then disadvantages. So as you've seen, imagine T has got an emergency, but they have to wait for, K has got an emergency, they have to wait for T to place their order, Z to place their order, headquarter to approve it for them to request up here. After requesting again, supplier brings everything to headquarter, they again sort it. Will you be able to work on emergencies? Will you be able to work on emergencies with that procedure? No. So, the disadvantage of centralized. The disadvantage of centralized, number one, you've seen it is a long process. You must follow all these. The centralized approval will not be easy for you. It is not convenient for perishable products. These goods are supposed to take maybe 3 days for these raw materials. You wait for these people to make their requisition, 2 weeks are gone. They bring it here, approval takes 3 days. Supplier again says they cannot do it immediately, they take another 1 week. That is 3 weeks. After bringing it here, they take another 4 days to supply all these goods to the subsidiary. 4 weeks, that is 1 month. You are still waiting for the goods which are supposed to expire within 1 week. So it is not convenient. That procedure is too long. Then another thing, that's one of the disadvantages of centralized. If I come to decentralized, we have G group. We have G group limited. G group limited has got subsidiary. So this is the headquarter. Has got subsidiary A, subsidiary B, subsidiary C. So headquarter has got 3 procurement officers. Subsidiary A does their things on their own way. They also have 2 procurement officers. Here we have 2 procurement officers, maybe because of same sizes. Here is too big. It also has got 3 procurement officers. This is G Group Limited. How many procurement officers that the company has? How many procurement officers? The entire company, that is G Group, from the headquarter to the subsidiaries, that is 5. That is going to be 7, 10. 10 procurement officers. That is G Group. Here, the company said, okay, we are dealing with several subsidiaries, but we only need 5 procurement officers. These people are employed permanent and pensionable. Permanent and pensionable. They are qualified. For you to be taken to the procurement department, you must have done some serious courses. So these people are qualified, permanent and pensionable. So look at their salary. Look at their salary, what the company will pay them. Here it is centralized. The company will only pay 5 people and the entire company is served. Here the company will pay 10 people and the entire company is served. So one of the benefits of the centralized, you only employ 5 people. So it saves on administrative costs. How about decentralized? High administrative, because even apart from those people, they will have to be given an office here. They also have an office here. They have an office here. They also have an office there. So generally, administrative costs are so high in the decentralized. This one here becomes the disadvantages of decentralized here. High administrative costs. Delay in accessing services stroke raw materials. That is the disadvantage of centralized. How about here? Faster access to services stroke resources that are used in doing the operations within the company. That is what you need to understand about centralized purchasing and decentralized purchasing. If you get to this concept, everything is explained in the notes. Are you able to tell us the advantages of centralized? Are you able? Here, the company is able to do the reconciliation of the entire branches. They're able to understand. Another thing, they are able to control. There's nothing like we purchased this and you cannot trace. So it minimizes wastage because they only request for what they need and it must be approved by the headquarters here. So once it's approved, you must be accountable of what you requested. But here, you might get the branch manager has got some interest on what is going on here. So what do? They do things in their favor, and therefore controlling that by the headquarters will become a difficult thing. That's disadvantages of decentralized. Another disadvantage of decentralized. But centralized, you can easily manage all that. If everything they are going to request must come here, and they also must be accountable of what they did with the request of the raw materials. So you'll be able to understand this. You'll be able to see it in our notes. Once you download it, you'll be able to see all those items there. So let's look at what is written down here. Advantages of centralized. 1, specialized and expert purchasing staff can concentrate on one department. We've seen they have 5 who are highly skilled and they only concentrate on that. But here, let's say we are just saying we cannot maintain all these 10 people. Let's just pick somebody who did accounting to be a procurement officer. So long as they can help us to serve in that particular place. But here you can access few skilled personnel and make them do the right job so perfectly. Then we're able to see better layout of storage space. We've seen that. Utilization of high technical skills, almost repetition of that. A firm's policy can initiate, which may result in favorable terms of purchases, e.g., higher trade discount. Here, if they go to purchase, they are going as subsidiary 1 or company A. Here as company B, here as company C. And whereby the supplier says, you must buy 100,000 units for me to give you discount. But when they just get 40 of what they need, this person needs also 40, this person needs 5, and this person needs 5. If they just buy that, they're not going to get the benefit of quantity discount. But if all this is transferred and done by the headquarters, they are going to enjoy the quantity discount. So that's another advantage of centralized. Look at the disadvantages, the high cost of internal transport, you've seen, they're centralized. You bring requisition, the supplier bring everything here, again you start supplying one by one. So that transportation cost, the arrangement, the manpower, another cost. The creation and maintenance of special purchasing department, additional cost. Non-availability of materials for production in time. As you can see, the procedure is taking a lot of time. Great risk. And then we have centralized purchasing is not suitable for plants or branches located at different places that are far apart. It is really making sense. This one here is in Nakuru. This one here is in Mombasa. Then the headquarter is now somewhere in Kisumu. Tell me, supplier is located in Western or Kakamega. So supplier will bring goods to where? Will take goods to Kisumu. After taking them to Kisumu, you have to transport them to Mombasa, again to Nakuru. How long will it take? Very, very long time. Then decentralized purchasing, materials can purchase by each department locally. They can be purchased locally. That time is reduced. No heavy investment required initially. Less cost of internal transport, as we've seen. Lower chance of goods becoming obsolete. Then we have the replacement of defective materials takes little time. If there's a problem within this subsidiary, they are free to do that change immediately. Disadvantages, poor layout of space, duplicate purchase of materials. We purchase it here, here for the same thing. That's another item. Less technical skills obtained, more clerical work, and lack of proper cooperation and coordination among various departments. So that is it about purchasing or procurement. So it was not tested. As you do your revision, please ensure that you touch on that particular concept. Ensure that you touch on that particular concept. Inventory system. So we have periodic inventory system. Periodic inventory system. Then we also have perpetual inventory system. Perpetual inventory system. Periodic inventory system only updates the ending inventory in the general ledger when a physical inventory count is conducted, since physical inventory are time consuming. Then few companies do them more than once, or once a quarter or a year, but that is not my interest. Look at what we have. So that is what we call periodic inventory system. Periodic inventory system, this is where in your store, you only say that every 31st, so you just do what? You count your inventory on 31st of December. So the last time you did that was last year, 2022. That's the time the company assigned some personnel to go and physically count all the items that you have in the store. Is it? That's what they do. Then you now do your sales until you are again waiting for 31st of December 2023 to again go and count. then you're going to get on this date, this is what we add. On this date, this is what we have. Getting the difference will help you get sales. Imagine you've kept your money somewhere, but you are not counting it. You are not even following up whether it was taken some minutes ago or not. You just keep quiet until that particular period when you normally do the counting or looking at what you already have. So one of the disadvantages of this, you might find that these goods have been removed from the store. They are being stolen by the storekeepers. They are being sold, but the money is not coming into the company's account. But perpetual inventory system, that is what maybe I can say most companies would like to adopt. One, they have a system. Let's say they have this system here. They have, let's say, they even have QuickBooks. Maybe let's check that. They have QuickBooks whereby they record their sales, they record their inventory. So remember, when they purchase goods, they get to the QuickBooks system, they add the goods that have been purchased. When they sell, the QuickBooks will be deducting in the system. The QuickBooks will be deducting that in the system. But they also need to go and check in their store. They need to go and check. They need to go and check in their store. QuickBooks is telling us that as at today, 15th of September 2023, we have 40,000 units in the store. If I go to the store physically, today I'm supposed to get 40, but I'm getting 39,000. So there's this 1,000 that is missing. So one, we will be following this 1,000. Whom did we give this 1,000? Was it some goods that were already destroyed, that was thrown away or were disposed? If they were disposed, do we have the disposal form that was indicating they were disposed so that we remove them from the system? Perpetual. Continuously, you maintain the system, you maintain the physical. So you continuously check what you have in the system, what you also have in the store physically. So we have some of the advantages of or disadvantages of this and advantages of this. Disadvantages of this are going to be solved by the advantages that this one here gives us. As you can see, when I do it once, there is low cost because I just bring somebody, do it once in a year, I pay them, that's all. But if I'm going to do it periodically, I need to maybe look for manpower to do that on maybe regular basis. What am I going to do here? There is going to be high administrative costs. Here, I've reduced the cost. But look at what we have. Here, you've reduced the cost, but maybe these people have been selling the goods and pocketing the money. But here, you can easily detect that within the shortest time possible, you'll get to understand what is going on. So are we able to look at the advantages of all these methods? Look at what we have there. There are several problems with the system. Which system? Periodic. One, minimal information. You do it once in a year. Hapa katikati we unauza tu, umekaa tu, you do not know what is going on. Two, estimation errors. We're just estimating, we just expect they are supposed to be these units until you count them physically. So that estimate might be misleading you because you've not confirmed the actual or the existing stock. Large adjustments. The last time ulihesabu ulipata uko na 50. Hapa katikati umeuza 10. You expect 40. But unaenda unapata ngapi? 30. So you'll say, okay, let's now start this year with clear record. You come here and tell us that as at 31st of December 2023, or you tell us 1st of January 2024, we are starting this year clearly without any mistake. Let's have 30. E10, the 10 that you've written off, are you able to account for it? We just assume that even if they stall, let's start a new year. Then you start the new year again, you find the same mistake. What will you do? That is the problem that we are able to see is mentioned there. Then not scalable. It is not adequate system for large companies with large inventory investments. For example, tell me you want to do this. You want to do this for EABL. EABL has got several products. They operate in Kenya, they operate in Tanzania, they operate in Uganda. Forget about that. Those are the subsidiaries. Come to Kenya. Look at the depots. Look at their depots. How many are there in Kenya? Maybe they are based on regions or counties. And then you want to assume this. Will it really make sense for you? The answer is no. That's one of the disadvantages. Now, if you come to periodic, this one here, you come up to, perpetual, continuous stock maintenance. You do it in the system, you do it manually. What are some of the benefits of that? One, records data in real time. The moment you sell, QuickBooks automatically deduct. If you just sell one and then you go to the report, it will give you what is supposed to be there. Then provides detailed paper trail. You can also request for audit trail. Who sold the goods? Who deleted the goods? Who adjusted the stock? At what time? You'll be able to understand. So the audit trail is very important. But here, we don't have audit trail. Then we have decrease inventory mismanagement. You can easily trace that. Provides detail, calculates end of year inventory balance very fast. If the year is ending today, you don't need to tell us that, no, just give me 1 week, I will give you the closing inventory. No. If it is 31st of December 2023 at 11:59, you can give us the closing inventory as per the system. Then forecast demand more accurately. You're able to know what you have as at today. You're able to see, even come up with a trend on how the market has been demanding these products, and then you come up with an estimate to restock your inventory. Then we have disadvantages. The calculated inventory levels derived by perpetual inventory system may gradually diverge from actual inventory levels due to unrecorded transactions or theft. Therefore, one should periodically compare books balances to actual unearned quantities. Here, the system is going to give you that, but you also need to look at what you have physically. You compare them, the physical stock and the system stock. Is there any discrepancy? Then you now do the follow-up of what we are missing there. It was tested, I think, in, is it December? Is it December? Yes, I think so. December 2022. It was not there in April. It was not there in August. So as we wait for December, we know the right thing to do. We know the right thing to do. Everything is there with you. So we should be able to do the right thing. So we are getting to maybe now almost reaching where we are supposed to do calculations. So we have what we call setting. Setting stock level. Setting stock level. Let's take it from this point. If we start it from the company point, somebody might get lost. Within your house or within your home. Why do we normally prefer that once you get your salary, there are some things that you normally buy that are going to serve you for the entire month? Or there are some things that you normally buy that will serve you for even at least 2 weeks. Why do you normally buy them in bulk? Why do you normally store them? Why do you normally bring in food to your store for even 1 week, even 4 days, or even 5 days? Why do you normally do that? The stock or setting stock level. Now, by doing that, Some people might do it because they don't have time to keep on moving to the market. They don't have time to keep on looking for the goods. Maybe getting these goods is very difficult. Now, are you able to give us the reasons? Are you able to give us the reasons or factors that will determine the quantity you are going to put in your store? Are you able to give us some of the factors that are going to consider when you decide on the quantity to put in your store? What do you normally look at? The first thing, what do you normally look at? I want to maintain maybe some foodstuffs in my store. There's a factor that must just determine what I'm going to have there. Are you able to mention some of them? Are you able to mention some of them? Yes, somebody will tell us, what do you normally think of, or what do you normally consider before you bring in or you decide on the quantity to bring to your store? What are some of these factors? What are some of these factors? One, money availability. So somebody is telling us basically that is level of income. Very important. You might be willing to even bring in 5 bags, but because of the income which you are getting, and you also have to meet other expenses, you cannot get the 5 bags. So you'll be forced to bring in only 2 bags. One, demand or rate of consumption. Rate of consumption. If you're only 2 people in the house, you cannot bring 3 bags. You'll only bring 1 bag. So rate of consumption, or you can even put it, maybe somebody has mentioned something there very interesting, demand. The level of demand will determine what you are going to store here. I've also seen another interesting thing, space. I want to bring these goods, but my house is too small. It cannot accommodate all this stock. So just bring in the small quantity that can be accommodated within the available space. So this space is very important. Yes, consumption level, demand of the final product, great. There's another thing that is making sense to me here called perishability or durability. Durability of the product or stock. I cannot take something that's going to expire within 5 days and I buy them to be used for the entire month. It will not be making sense. So perishability or durability of the item will determine the quantity you are going to bring to your store. Now, putting these factors into consideration, are you now able to convert them and relate them to a company? Are you able to relate them to a company? What are some of the factors that determine the stock setting level? What are some of the factors? What are some of the factors? So I've seen which is going to apply in both is consumption level or rate. I'm able to see insurance cost. There are some goods that you are going to buy and then you insure. So if the insurance cost is so high, you'll reduce the quantity for you not to pay high amount to the insurance company. Another thing, what you are going to set, the setting of the stock level will also be affected by what we call economic order quantity. Then after that, availability of funds or level of income, or we can even call it availability of funds availability of space, which we now call here storage cost. How much do you incur to hire a warehouse to put your goods? If the hiring cost is too high, then automatically I will not bring in more goods. I'll have to consider my capability in terms of paying for the space. Another thing, availability of whatever you're going to purchase, or there are these goods that are normally seasonal. There's this time when you're going to get them in bulk. There's this time that you're going to have scarcity. And because you want to do continuous production, and it is the main raw material that you need, you're going to put them in bulk. You're going to purchase them that can even serve you for the entire year, so that at any given time, you will not be having a deficit. So the availability of that material which you want to purchase will also determine the quantity you are going to purchase, or the level you are going to set. Again, we have this which we call lead time. Lead time is the time taken between placing an order and receiving the order, or receiving the goods. I want to order for a product. I will get to my phone, maybe the online platform, I place an order, do the payment. But for this particular product to now reach me, it will take 5 days, it will take 2 months, it will take 5 months. That one will determine the quantity I'm going to maintain in my warehouse. It will determine the quantity that I'm going to maintain in my warehouse. Then another thing that I'm able to see there, we have availability of funds. I think we've mentioned it there. Government and other legal and statutory requirements. So we have government policies or statutory requirements. They are those goods, maybe if you're going to import them, the government has placed a cap whereby they cannot be ordered beyond a given quantity. So if you're going to be 10 suppliers or importers, and the first importer has already taken half of the allowed quantity, the remaining importers, even if you are 4, you have to share the balance now. You cannot produce or bring in more than what is required. So therefore, that one also, that cap, that limitation, that policy will have to influence or affect the quantity you are going to order for, or you're going to have at any given time. So that is under setting of the stock level. And for us to deal with this stock level, we need some important things here. What are these important things that we are talking about? What are some of the important things that we are mentioning here? So when you're going to set the stock level, one, we need to look at what we call reorder. Reorder level. At what particular point should we now start being worried about what we are going to bring back or we are going to purchase? For example, we have said, so long as our stock or inventory reaches 150, we must start processing another order so that we do the restocking. Some people have a restocking level of 8,000. Anytime their inventory reaches 8,000, they must initiate a new order. a new order. So that's the reorder level. That is the reorder level of any given company. So how do we get to calculate the reorder level? That's what I want us to look at. How do we calculate the reorder level? How do we calculate the reorder level? The reorder level. How do we calculate the reorder level? Yes, I believe you have that in the notes. So I just want somebody to help me get that from the notes to at least confirm that we are together. So just check the note that I shared with you. Check the note that I shared with you. Then you tell me the formula of getting. Reorder level. So please do something there. Engage your chat box there. Tell us what we need to write. Tell us what we need to put there. Reorder level. Reorder level. Reorder level. How do we get our reorder level? How do we get our reorder level? So it is maximum consumption times reorder maximum consumption times reorder period. Maximum consumption times reorder period, but not just reorder, but maximum reorder, maximum reorder period. So that's formula number one, which you need to have this one here. So we've started calculations in this particular topic. That is reorder. That is reorder level. Then we want to get maximum stock level, maximum stock level, maximum stock level, maximum stock level, maximum stock level. Sasa watu wako na notes na wasemi kitu. Are we together? 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 Minimum stock level is equal to reorder level minus normal consumption times normal lead time. Minimum stock level is equivalent to reorder level minus normal consumption times normal lead time If this normal lead time is not given, if normal consumption is not given, if normal lead time is not given, what do you need to do? Normal consumption is the same as normal consumption is equivalent to, if it is not given, if the examiner does not indicate precisely that normal consumption is this, then we'll be taking maximum consumption, we add to minimum consumption, then the summation of this we divide by 2. In short, we are getting the average. We are getting the average. If the examiner has not given you normal lead time, then normal lead time will be equivalent to maximum lead time add minimum lead time, then everything you divide by 2. Normal lead time will be maximum lead time plus minimum lead time, then you divide everything by 2. If the examiner has not precisely given you the normal lead time, but if they are given, don't use the average. You don't use the average if these ones here are not precisely given to you. Let's come to number 3. Number 3 now. Let's come to number 3. Number 3 now will be what we call maximum stock level. Maximum stock level. So how do we get maximum stock level? Maximum stock level is equal to reorder level minus minimum consumption times minimum consumption times minimum lead time. Whatever you get there, you add to reorder quantity. I hope we are making sense out of what we have. I hope you are making sense out of what I have here. Then there's this thing we call average stock level. So we have average stock level. So let's get to understand that this average stock level will be minimum stock level plus maximum stock, then everything here you divide by 2. Then everything there you divide by 2. Then number 5. Number 5. Is there something that I'm leaving out? No. That other one applies to economic order quantity. That's where you're going to get it. So in the stock level, if you know this formula, if you know these formulas here, you are good to go. If you know those formulas, you are good to go. And I need to just confirm to you if it was tested in just the concluded exams. That is ATD, if I'm not wrong. I think I saw something of that kind. ATD August sitting. So as we wait to meet tomorrow, no, next week on Tuesday, we shall be looking at this particular question. I think I saw something of that kind somewhere. No, it is not actually here. But I will share with you the past paper question, the specific ones that are touching on this. Then we see what you need to study. You see what you need to study as far as this concept is concerned. I think I saw something. Yes. So just try to go through this, do your practice by looking at ATD Fundamentals of Management Accounting, April 2023, question number 4B. Question number 4B. One, they are asking you to give them reorder level. So they are telling you to give them number 1. Then maximum inventory level, they want you to give them this. And then minimum inventory level, they want you to give them this. So go through the notes, master only these formulas are what you need to be done with this concept. Master this formula, then you attempt this question. When we meet, if you also get to LMS, you'll be able to understand how this formula applies and even some examples within that LMS. So just try doing this. When we meet on Tuesday, I'll be tackling this, but at least try to do it by your own. So maximum labor formula you have just given us is different from one in the notes. Please clarify. Yes, there's that slight difference. To me, I use this one here. It will take you to the same answer, but it is having a different approach. So this one is the shortest for you to master the concept. So just use this one here. Just use this one that I've given out here. So I believe that's enough for today. Thanks for your time. Mwalimu, kindly share the number we are sharing our names to. I said you share those emails, management accounting only. You share them to this number 07, the WhatsApp 94 555 000. Other units, please share them to this person here 07 90 30 79 30. Any other unit, if you want to be connected to LMS, contact this number. Management accounting, this unit, tafuta huyu kwa WhatsApp by just registering, and then you share your email there. So I believe that's enough for today. Enjoy your weekend. Let's meet on Tuesday. This question answered. Have a blessed weekend.